Hey everyone, welcome back to the channel, and in this video let's cover the HEX versus Ethereum ROI from launch. We've covered this in a prior video, but I just wanted to kind of update you on what it's looking like. I also got a comment saying, what if you align it by seasons, because it looks like, this peak over here on HEX might be aligned here if you say, align them by December as a starting point. And so we went ahead and did that, so that's something we'll be covering in this video as well, along with, where we are now in our bull flag. So all that and more. If you like this kind of hybrid quantitative and technical analysis, make sure to leave a thumbs up. Be subscribed by the end of the video if you aren't already, and let's go ahead and dive right into this analysis. So let's start off with where we are now, right? We've talked about this region of potential support because it's been prior resistance. We've talked about it for over a week now on this channel, the 1.37 to 1.5 penny regions. And it looks like we bounced clear off of that. And we've also been looking at this channel, right? We said this could be a bull flag. And if so, well, this is simply a correction right here, this falling parallel channel. And we've pretty much held it for the past 22 days. So I remember we covered the parallel channel on the upside for the longest time. And actually, when that parallel channel broke, we started forming our downtrend, if you remember. So we had a pretty clear parallel channel to the upside, and now we have a pretty clear parallel channel to the downside. So it's nothing too complicated, right? We're in a short-term correction, mini downtrend, if you want to call it that. But look at this. The candle closed and came right up to the very top of the channel. We had a wick above it, but at the end of the day, we're still down here in our channel. So this sort of coincides with the analysis, if you recall, of the 100-day moving averages. So let's just go ahead and recover these, and you pretty much have this convergence of support where we've had support and reaccumulation in the past. And remember, this is not only moving average support and horizontal support, but we also had our exponential support on the regression rainbow. So a lot of convergence of support is generally a bullish sign. Might have been a great indicator to take advantage of something like this bounce. So could this be the end of this downtrend? Potentially, but we'd probably have to see us break this upper bound more decisively than just a wick, right? Actually start closing candles and start forming something like our prior, parallel channel upwards. So until we see that, it's still a mini downtrend, but again, my contention is this could be the bottom, right, so to speak. Not financial advice, but historically speaking, now looks good even on the HEX Ethereum pair, right? We talked about that. But I wanted to go ahead and cover this again, like I said, our HEX Ethereum ROI from launch, right? And there's a whole video on this. I'll leave a card here so you can check that out if you haven't already. But as you can see, we're still way ahead of the schedule, right? I wanted to point out this fact that if you notice Ethereum's rally, it was pretty much finding resistance at around 10x from launch price for the longest time, for about, a little over a year. And once we formed this, if you can see this little bull flag right here, and found support on the 10x region, we went ahead and started printing candles way above that, 22x from there, right, for this local peak, and then another 3.5x to here. So a total of 77x, and this is just candle data, right? So if HEX were to, it seems like it's been finding resistance on this 27x, 28x, 26x. We're at 30x now from launch price. So if it were to repeat something similar, and this is actually our support on our 30x ROI zone, and then it were to go up another, what was it? Another 77x from here, then we're eyeballing dollars at that point, right? And again, it looks like HEX has been outperforming Ethereum not only in ROI, but also in speed of doing so, right? And this is where we are now in our HEX ETH ROI performance index, which we've been looking at, right? We speculated that, we've been as overperforming as high as 23.5x in the past, and we were speculating, well, where could we reach? I remember around here somewhere we made this video, and we got to about the 10x region, which is kind of interesting, right? So that essentially means HEX right now is outperforming Ethereum by 10x on similar time frames, right? days since launch. We're at 31x here. Ethereum was around the 3 to 4x. So that's pretty interesting, right? But a subscriber commented, well, what if you aligned this peak with this peak? But not necessarily that, right? What if you aligned seasons? So what we did was we aligned the December of 2015 for Ethereum with December 2019 on HEX. Okay, and it looks something like this. And we called it a 4-year cycle, right? Because December 2015, December 2019, they're 4 years offset, right? They start both on December. And the only goal of this was to look at them on a seasonality time frame, okay? On a similar season time frame, so to speak, or similar season framework. And you get something kind of interesting, right? You remove that entire, well, HEX outperforms Ethereum in speed narrative because it doesn't on this chart, right? Which it's sort of a manipulated chart to overlay seasons, but nonetheless, I feel like it provides some insight because if you look at, how they act relative to each other, well, you can start seeing some similarities. Like you had this post-launch dump, so to speak, but then again, right, we're comparing HEX launch to, what is it, like 4 months after Ethereum's launch, so it's still a bit iffy, but you have this run up, right, this really early run up into the 10x region, okay? And then what I find really interesting is where we are now, right? After this whole ordeal where we pretty much just go sideways for about a year. With HEX, it was a little more volatile because of big payday and things like that. But at this point, we're pretty much riding it damn near perfectly around the 30x region. And if we see what happened afterwards, we had a local peak around 220x ROI from launch, or rather from December, right? And so what is that, like a 7x away? What would 7x put us at right now? Like 10 cent HEX, 10 cents per HEX. So you start seeing, and what if this was just a local peak and we had some corrections, maybe it crashed back down to 2 or 3 cents, went back up to 10 cents, and then you had this maybe macro reaccumulation over 6 months, a year, and then you go off and make another, what is this, another 4x or so, then you're looking at, potentially 40 cent, 50 cent HEX. You see how it starts getting kind of heated very quickly, and we're talking about all this happening just in the next year or so, by the end of the year kind of thing. So could we have a blow off top this December? I mean, I was never a huge fan of four-year cycle theory, but I've mentioned this before. Given the angle of attack that this bull market is approaching with, it's different. It's actually on par, if not a little faster than 2017 bull run, which, I mean, the data's not lying, right? It's kind of giving these guys, these lengthening cycle guys, a run for their money. But that's why it's important to be open-minded, in my opinion, and look at what the data says, right? So I thought this was an interesting insight. Thank you to whoever commented that. I found it very insightful, the fact that, if you align seasons, maybe that makes a difference. Maybe seasonality actually has an effect, on human psychology. So, again, just nothing to take home, nothing to take to the bank, but interesting nonetheless. And I really just want to look at this chart for a second because this could be meaningful, right? HEX right now is retesting previous resistance and on this ROI chart. And when Ethereum did that, just remember what happened, right? We potentially could still have way more legs to this bull market. And, we could just be getting started. It could be the second half of the bull market or something like that. Not financial advice, guys. These are just my takes on what's going on. So let's see. We covered our bull flag. We covered, the HEX ETH ROI from launch performance indices, the normal one, right, as well as the 4-year cycle one. And let's give you guys a sneak peek, actually. So I've never done this before. I've never shown you guys a model before it's complete, but this one's tricky, right? And I kind of want to show you a rough draft, just let you into my world. And this is the stock to flow model, okay? So on Bitcoin, you have the stock to flow model. I think the correlation coefficient with price action and the smoothed out stock to flow model was pretty dang accurate. It was like in the 90% or something like that. Something insane. Okay, and I haven't been able to achieve an exact model with, a 90% correlation coefficient, but I do want you to look at what the HEX stock to flow granular model looks like. So this is kind of definitely not HEX price versus time. HEX stock to flow ratio is what this is. And that's pretty much it versus time, right? So S2F, we can call it, not S2, 3F, S2F versus time. Okay, so you have the HEX stock to flow ratio versus time. On the y-axis, you have your stock to flow ratio, and on your x-axis, you have time. Super simple, right? And this here is on a linear chart. So what does this mean? Stock to flow is essentially the inverse of your inflation, if that makes sense. So let's actually look at this on a logarithmic scale and adjust our axes a tiny bit. And I'll explain what I meant by, okay, stock to flow is basically the inverse of inflation, of your inflation rate. So at the beginning, HEX in the first year, if you just look at year one, right? If you smooth this out to a year, then it takes a year in the first year to create, I'm jumbling up my words here. Okay, the definition of a stock to flow ratio is, how long does it take to create the supply you have now, is what it means. So after year one, you pretty much have a stock to flow ratio of 1 to start for any given asset, if that makes sense. All right, because your inflation is 100% because you went from 0 of something to 100% of something. So on year one, your smoothed out yearly stock to flow ratio is 1. The reason it's not just a flat 1 here on this chart is because I actually made it granular to every day. Like on the first day, you had 1 billion HEX being printed in the lobby, and then a copy with the AA, and every day 500 million with the same mechanism. And so you actually get a curve that looks like this because 500 million HEX was a smaller fraction of inflation relative to the entire circulating supply on any given day. So this is not smoothed out to a year, but actual granular to the day, including big payday, where you had basically a mini supply shock, and so your stock to flow ratio dropped for that day or so. So this essentially implied, if price were to follow this at all, you would have sort of this logarithmic kind of growth for a minute, a post-big payday dip, and then a pump, and then something more stable. And guys, this stability period here of stock to flow ratio of about 27 is where HEX stabilizes at 3.69% inflation, right? All you have to do to get this number, it's super simple, and I'll show it to you right here, is 1 divided by 0.0369, right? Maximum inflation. And that's what I wanted to get at, right? This stock to flow ratio is a minimum stock to flow. Why? Because 3.69% inflation is maximum inflation rate. So, given the fact that people are locking up their coins for years, on average of 5 or 6 at this point, nearing 6, I believe, then the flow is actually less, right? You're not printing 3.69% per year circulating, right? Because staked HEX isn't circulating. So I believe in the contract, it even distinguishes between allocated supply, which is staked plus unstaked, and circulating supply, which is just unstaked, liquid, right? And so that's an interesting little Easter egg, I guess you could say, that this 27.1 is a minimum stock to flow. So let's say on any given year, only 1% inflation because the remainder is being credited staked HEX, right? So let's say on any given year with 3.69% max inflation, you actually only have 1% printed into circulating, right? So at that point, you would actually, for that year, you would have a stock to flow ratio of 100, right? So this starts rivaling things like Bitcoin and gold. So this number here, this 27, can actually be a lot higher, and it actually is, right? This is a floor, so to speak, and the actual this actual curve should be something around like, it'll do something around here depending on that chart of stakes over time, right? So that chart directly influences this chart over here. So you get something like this dip and then some sort of formation over here that is always changing, okay? And that ranges anywhere from 27, 28 all the way to say 100. Could be even more. So if price is tied to this in any given way, like Bitcoin's price is tied to its stock to flow model, then things could get quite interesting, quite bullish, right? And again, I attempted to plot these together and do some mathematics on them and try to get a really good I'm blanking here, R squared, right, correlation coefficient. And we also looked at some of the tools that the stock to flow model guys used, and it's kind of tricky, I'm not gonna lie, to actually get a curve, right? I believe for the Bitcoin one, it's something like, can't remember the exact formula, but it's something like you have a coefficient up front, this A, right? You have stock to flow, your actual ratio to some power n. So here's the actual formula. I believe with Bitcoin it's like some multiple here, and I think it's n cubed or something, which if you look at what n cubed on HEX looks like, it's wild. It goes up into the tens of thousands. So not the exact same model, obviously, it's fitted to different data. So I just wanted to kind of let you guys in on my world and on this data that I've been holding back for a minute, what the actual granular stock to flow model actually looks like. It's pretty interesting. I wasn't even expecting that to be the main topic of this video, and it kind of did turn out to be, just because there's a lot to explain. So if you guys have any insight on the stock to flow model, I'd love to hear it down below. Go ahead and comment. If you like this kind of content, again, make sure to leave a thumbs up for the mixed quantitative technical analysis on HEX. I don't think many people out there are doing it. With that said, let's get to 1,400 subscribers. It's the end of the video, so if you're still here, you should definitely be subscribed. And yeah, with that said, I'll catch you guys in another video. Peace.